The S&P topping has continued. Today is October 23rd, and we have been saying for some time the S&P was near a high point, and that we expected last week to be a sideways week with an emphasis toward the end of the week of a little rally, which did happen. And then we expected the first few days of this week, potentially even to the 23rd, which is today, to be down, which it has been, okay? If the pattern continues, and we believe it will, the market should rally till the 27th, 28th, 29th of October, and at least retest that high. It may make a new high, but at least retest the prior high. It was just down 100 points today, you know? So that seems unreasonable, but it isn't. And most of the patterns we're looking at indicate that there's a high at the end of October, and even potentially holding up all the way until the election, or even after the election for a few days. So it doesn't look like the market's ready to fall apart, even though some people may be feeling that right at the moment. So I wouldn't get crazy short here, but we are expecting topping. And then between the high that comes in at the end of the month or early November, we expect it to go down hard into the 22nd of November, followed by another rally, maybe a big one, into the early to mid part of December, okay? This is, by the way, the swing trader viewpoint, which we're emphasizing at the moment, is that the market is probably going to go a little bit higher. We were still thinking 6,100 to 6,200 could happen by the end of the year. And if it does happen, it's also likely to happen in the early to mid-December area. And then we think the second half of December, what usually is a Christmas rally, this year, I think, is going to be a Christmas decline. Now, the analogs to this are very interesting because after the end of December, next year, even though we're expecting some weakness to come in the first quarter, we do expect January of 2025 to be fairly bullish for the whole month of January, indicating a high possibly around the 25th of January. And what's interesting is 1986 had a very similar situation where the October decline, which is usually in a case, usually September, October, the market goes down. We had a rally in September and October. Same thing happened in 1986. You had a low August 5th. You had another low September 11, 12, which we did. And it rallied all the way up into November 12th, had a hard breakdown into November 20th, 21st, that time. And then it rallied further into early December, okay? And then after the early December high, which may come out around the 9th or 10th of December this time, which may be when we finally reach the 6,100 to 6,200 area, most of December was down, interestingly enough. And then the following year, 1987, which everybody remembers, is a big crash year, but it turns out the first 8 months of 1987, the market went up, and it went up strongly, you know. So several things. First of all, the election cycle, historically, after the election, the first year after the election, which is next year, the market tends to be more bullish than not. And also, the fifth year of every decade, it's called the decadial cycle, the market tends to be up in the fifth year, okay? Also, the 60-year cycle, which we've been emphasizing for some time, says that the market is likely to potentially go sideways, maybe a little bit down at certain points. But after all is said and done, it goes up at least until May and potentially even until August of 2025. If it did that, that matches 1987 also, where the high came in on August 25th. Also, we have a 188-week cycle, which we've shown in the past, that is basically goes up 94 weeks up to the August 2025 high point. So we're not expecting any dramatic decline, although they did lower interest rates. And historically, it generally is true that after lowering interest rates like we had in 2007 and other times, the market has a bear market right away. We do expect a bear market, but not yet. We think it's going to be probably starting in the third quarter of 2025, go on for a year and a half down into the early part of 2027. there were some people who asked me for a longer-term forecast. And that's our longer-term forecast. We're expecting some weakness still potentially in the end of this year, in late December, a rally in January, potentially sideways to down into April of next year, and then another rally at least to May, maybe till August of 2025, expecting that until that time, the market could conceivably be higher and minimally not much lower. Even if I'm wrong about the down months being bigger than I expect, I still don't see the market falling apart until at least August of 2025. Interestingly enough, if you look at the 2008, 2009, calamitous decline in the stock market, it basically went down, but it really didn't fall apart until August. And that's a more bearish scenario than we expect by far in the present situation. Now, the other thing is the crude oil market. Again, we repeat this because it's unusual to have an opportunity like this where the market is basically it's preparing for a big rally. It had a nice rally up to 78 and it's come back to 68. Now, as we said, when the S&Ps will go down, as they did the last few days, crude would go up, which it did the last few days. It went up from the upper 68 area up into over 72 in the last 3 days, where the S&P fell hard. We expect a similar pattern going forward. So over the next week or so, crude should come down yet again, possibly a little bit lower, and make a low again at the end of October, possibly waiting all the way until November 4th to the election time, and then have a rather striking rally continuing in November, and another one probably starting in the middle of December, continuing the uptrend until early January. We have a January 9th or 10th high projected for several different reasons up in crude, and the market may be way higher by then. And we are very pleased to tell you again, we mentioned on the last video, we published an article in Traders World magazine in the most recent quarterly edition. I think it's the 94th quarter or whatever. And the link is in the description below.